Absolutely. If you've got a long enough time horizon, this is a terrific opportunity, particularly with the technology sector. That's because we're seeing a very significant amount of earnings growth there. We also see tech companies have the highest level of cash on their balance sheets. So they're fundamentally sound. They have a lot of cash to deploy. They could be reinvesting in their businesses. And actually, over the last 10 years, tech companies have been the highest dividend growers, and that could continue because of those cash levels. And also, relative to historical levels, valuations are not bad for tech stocks.
I agree, Sue. I would add one more thing, and that is that most tech companies are really leveraged to the upturn in the capital spending cycle, which we think is going to start to unfold in earnest as we get into the latter part of 2014 and into 2015. So I would wholeheartedly agree. I would say, though, that some of the corrections that we've seen and some of the real high-flying tech stocks have still not brought them down to levels that would be.
Well, it's a really strong quarter performance, and let's first focus on the profits here. We saw that on our downstream business, we had another record profit quarter. In the midstream business, we almost tripled the profitability compared to the last quarter. And in the upstream business, we actually had another continuation for 10 consecutive quarters now of improvement. On the revenue side, what you have to take into account is that we have been growing our revenues in the value-add business as well as our profits, and at the same time reduce our footprint to become less vulnerable from the commodity side. Let's look at why did we see this enormously strong performance on the downstream business. We saw it because we had a very, very good performance and growth in aerospace. And on top of it, commercial transportation is coming back. In all of these markets, for Alcoa, you see a general market growth. And then on top of it, what Alcoa can add to it through the innovative products we're coming out with.
Well, I mean, to be honest, Kuroda has actually been fairly upbeat, and that was something which caused us to change our forecast around the April BOJ meetings. Hitherto, we had expected that the consumption tax hike may have brought in further easing from the BOJ, but we changed our call when we looked at the tone from Kuroda's recent speeches, where actually he seemed quite happy with how things were tracking, and certainly not too fearsome of what was to come from the consumption tax hike and its impact. Right. But we still think, I mean, what we need to see is obviously how the economy fares over the next few months.
You want to see the numbers.
And that's the thing. We do see that potentially, 105 to 110 could be seen on dollar yen again, but it will take, to the end of the year to get there. Certainly the next few months we'll continue to probably, at some stages even head back to 100. And that's the difficult thing because,
that's a big fluctuation.
It's going to be a big fluctuation, absolutely. And this is, we argued with our strategists, is that really going to play out? But in the long run, they think the BOJ will deliver.